Adam Parker. Adam, it's great to have you back. Good morning to you.
Good morning, Carl.
I know there was a time last fall where you were definitely on the under in terms of the way in which the Fed would progress from here. Has the data changed that view materially for you?
I mean, it's a good question. Look, I'm not an interest rate expert, as you know, but I just have learned in the last 10 years that whenever everybody thinks something on the interest rate side, you're better off leaning in the other direction. So I think everyone got a little bit too hawkish. But if we're marking to market what's happened in the last few months, Carl, I think you have to be honest and say, okay, we had a big change about perception of rates. We had a growth scare. We have a war. And so what I think, more expert on is corporate earnings and what's in the price. And I think 2023 earnings will be above 2022, but I think there's a risk that relative to what I thought 3 months from now. I think if you're being intellectually honest, the probability 23 earnings above 22 are lower than they were 3 months ago.
I know you got some really well-defined themes here in terms of what you want to go long on. Mid-cap biotech, healthcare, you still like energy, you like old technology, you like Dell. Can you talk about what strings these together?
Honestly, I think the biotech stuff is interesting because, we know that growth stuff gets hurt when rates rise. But I think it's a little bit intellectually lazy to just say, oh, rates are rising, so all growth is worth less. I mean, only 15% of biotech companies actually ever generate positive cumulative free cash flow. So your discounted cash flow model will actually lose less. And, a lot of them get taken out. So the sales pipeline looks the same. The stuff's at a 10-year low on price to sales. If you're going to start dipping into something that's a little bit more speculative growth, that makes more sense to me, biotech, than maybe profitless software that still trades at 20 times forward sales. So I think there's stuff to buy in that kind of, let's call it speculative growth part. Biotech looks good. I think the other businesses, and the key theme I'm talking about with investors every day, is gross margins, net margins 6 months from now. Where are they achievable and where aren't they? And so what threads those themes together is where I think they either have pricing power, like healthcare services, or, I use United Health in our business, and they certainly have pricing power over me. Or, where they can pass on those costs, right? So that's, I think, the key, where they can pass on higher commodities and transportation and wage costs to their customers. Those are the businesses that are going to work. And that's what most clients are focused on right now.
Yeah, healthcare. It's been an area of actual secular inflation for quite a number of years now. Adam, I realize we're seeing this divergence right now between equities and the bond market. Two different narratives, arguably, that are playing out over the not near, but medium to long term. The rising risk of recession, at least as it's being flashed within the bond market right now, the playbook that you're laying out, does it stand up against that possibility?
Look, there are periods, Morgan, where corporate earnings can still grow, but you have a technical GDP recession. I think that's possible. I think what we're trying here is for the Fed to thread the needle where they can slowly raise rates but not cause a recession. If there's a mild recession but earnings grow, that's possible. Why? Because what usually causes the top is corporate arrogance gone awry, hubris, right? Too much capital spending, too much hiring, too many hiring of, fancy new MBAs, inventory in advance of recovery, all that stuff. I don't see a lot of corporate excess right now. So if the economy slows, sure, it'll compress earnings some, but I don't think we're going to have a big earnings decline. And I think that's probably not how I would position the portfolio. I don't think the base case is earnings decline very much.
So you've given us your long themes. How about your short themes? What are you steering clear of?
Certainly, profitless software, the kind of stuff that doesn't work after, a growth stock sell-off. I'm cautious there. I think a lot of staples look expensive to me. They're over-earning. I think the estimates could be optimistic. And as you know, the conflict, the war here really exacerbates some of the, wheat, soy,
That's it.
Shepard Smith here. Thanks for watching CNBC on YouTube.